10 for now. The CAPEX for FY27 is at 12.2 lakh crores versus 11 lakh crores for FY26. There is a special vehicle which has been looked at, which is the PSU real estate special REITs are expected. So many of the PSUs which are sitting on a lot of real estate assets can now monetize those assets through REITs there. There is a restructuring for PFC and RSC which is expected, and it could be in form of a merger or any other structure which will come in. The finance minister has very clearly articulated the debt to GDP framework which she's looking at by 2021, which basically means that debt to GDP would be 50% plus or minus 1 by 2021, and for FY27 it's pegged at 55.6%. It's slightly higher than the street expectation of 55.2% there, but the fiscal deficit is pretty much in line at 4.3% versus 4.4% last year. There is also the 16th Finance Commission recommendation which has been accepted by the Finance Ministry. The centre will be sharing nearly 41% of the tax revenues with the states, which is in line with the 15th Finance Commission numbers there. There's an important thing for the data centers incentive, especially hyperscalers. There's a tax holiday coming up to 2047 for them, for any company which is providing cloud services. So the Googles and the Microsofts of the world will be happy with that, as long as it is provided through a data center in India and to the Indian companies there. So that's coming in. Relaxation in buyback. There's a stringent buyback norm which was there, which was taking buyback as a deemed dividend. That's been relaxed. Now the taxation will be as per capital gains. There is some taxation rules for promoters who are participating in the buybacks, which has been capped for corporate and non-corporate ones. The STT, as I said, has been increased by 150% for futures, 50% for options trade. And you're going to see that major impact coming in on many of the capital markets players there, because the revenues are going to see a sharp hit there. And final,
we're talking about capital markets. It's very important to highlight the capital market reaction. Yes, it's a Sunday. Yes, the volumes are low and dried up. But look at the reversal that you've seen in the equity markets. It's a 300-point fall that you're seeing on the Nifty alone. And to think of it, we were going absolutely flat at 11 a.m. into the budget speech. Other than select pharma, there is nothing that one can point out. And of course, PFC and a few EMS plays. There's nothing which is in the green right now. While metals, of course, was the weak link from the word go. The disappointment that there was no separate defense allocation coming in. That entire defense rally that we started off so beautifully into the budget has completely unwounded. BEL is now down 5%. And remember, up until 11 a.m., it was one of the top gainers on the Nifty, leading the Nifty up. SBI down 4%. Couple of the technology plays as well are lower. Shriram Finance down 3.5%. Bajaj Auto down 3%. Coal India down nearly 3%. Jio Finance down 2.5%. Tata Steel down 2.5%. Bajaj Finance down 1.5%. Eternal, Titan, Reliance is down 1%. L&T, and remember, L&T, Reliance were going strong into the budget, but completely turned tide. Even Tata Motors passenger vehicle, which reacted very positively to its monthly sales, that stock as well has seen some profit taking, and it's now lying in the red as we speak. Flattened that for HDFC Bank. M&M is down 1% right now. Cipla, ICICI Bank as well muted. It's only TCS which is barely holding its head above